Hello, today is the 5th of July 2011, and welcome to today's silver analysis. We'll start off within the price purchasing power, this time within Super Bowl tickets. They have inflated to massive degrees, losing almost 100 times its value. Silver, well, not doing so well. At one point, you can get 1,700 Super Bowl tickets, I guess, right in 1980 for that Super Bowl itself. But now we're down to 13. And there's a lockout going on right now. I guess that what's going on with the labor stuff, it might have a little bit to do within the current economic system. And I'm also thinking that the cost of the sodas at these games would be looking very similar to this chart as well. Let's start out with the silver analysis. We'll look at the quarter or the quarter day chart. That's it. Yes. What's happened is it's made a similar size bottom. Didn't make a lower low, didn't make a higher low. It made a matching low. And now it's managed to come up to its previous level of resistance. Thus, it has made a pattern for that of a double bottom. When you have pretty much two U's that are around the exact same, with around the same length of the bottom. And if you were to make a higher low like this, then you would have a cup and handle that's even stronger. And if it grows higher, just goes sideways, then that's like a bull flag. Sort of like this entire move has been that of a little bit of a bear flag. Still indecisive which direction it's going to go. Still within this range. And this support line, this that connected these lows in here, still has yet to have been tested, but neither has this trend line that I pointed out recently, which connects the first three tops on the pattern of lower highs and lower lows, which obviously has made the matching low. So therefore, this could be more of that of a descending triangle with a line roughly at around 32.85 as support, but even down towards this previous low here of around 32 and a third as the significant support level. Still needs a lot to state that the trend is reversing back to a bullish situation. It would be that of the 50-day moving average and the key resistance roughly around 38, 39 that I need to see for now. But right now, it's got to manage to not only test this trend line, but even get over it. So that's two different things that would pretty much need to do. If we take a look at this within the 50 periods, this is the 6-hour chart with a front weighted 5-day moving average, which for the last couple of months has been very much indecisive, choppy, going above and below the significant area. There's a declining 5-day moving average, which was not finding resistance. Rather, it got above it, but didn't stay above it and didn't find support at this level, but because it barely went below it, thus making a matching low to the previous one, it's now gotten back above the 5-day moving average. The 5-day moving average is that of neutral, and it's also approaching the significant Fibonacci line. This Fibonacci line is based on the lows and the highs, and within it, it's now looking to be getting above this level. Possibly. The secret or the key is holding somewhere that's a higher low from the previous one at 33 and change. Realistically, in and around 34 and higher, and that's, of course, if it even wants to pull away from it now. If it moves higher, the next significant Fibonacci level will be $35.96 per ounce. This little band here is also starting to get higher, but that's based on the mathematical formulation of it. The way it's set up is it takes this 18 period average, and that's where it originally works from within that level there. And then the rate that it goes higher or lower is based on the volatility that occurs within the time frame, which is also using a average of the last few days. In this case, it's 18, although this is a 20 period average. Therefore, the volatility is front weighted. Therefore, it had a big candle move, and that's why the band is starting to go towards the upside. Therefore, on the breakout, I'd be looking towards 36 as a significant resistance. But the biggest one, really not where resistance happens to be, but to find a way to find support at what used to be resistance in or around the 35 level. Again, breaking through these big support levels in here could be extremely dangerous. Nothing yet has broken the trend. And if we look at this on a daily perspective, we reached this high in here. We'll just draw a straight line right here. We obviously have not been above that line. Then we made this low. This is within 2 days. The movements that occurred on this May day and this May day have seen the market stay within this range, and now it's pretty much in the near the midway point of this range. Therefore, not much is happening, showing the sideways consolidation. It's now been about 1,000,000 days, but realistically about 40 some odd days or so since we've been doing this sideways action. The moving average, which is the 18-period average, it is declining, but because it makes this higher low and it's at least able to stay, then this moving average will go sideways. Thus, the market would go from cautiously bearish to that of neutral. The reason why it's cautiously bearish is because it's a declining moving average. It's been mainly staying below the average, but this is the first time it's now been above it since back in here, and it would be the first time it would close above it really since, well, in here and, well, definitely back in here. Making this baby start to go sideways, and then getting above some of these key previous resistance points would be important. But the bigger one will be this resistance level here at $38.14. The whole area is big, 38, 39, upwards to about $40. If we don't break lower below 32, then that will definitely be the area it needs to get above to confirm a breakout. If it does manage to go lower, then that would change the story, because if we manage to come back anywhere below here, then now the confirmed breakout would be lower than 38. That's probably the best way of putting it through. Still holding above this Fibonacci line and still below this 18-period average of lows. This is front weighted, and it's set at 35.27. The front weighted means that over the last 18 periods, it puts most of the relevance on the last candle. So it takes its level that it has, timesing this by 18, timesing this by 17, 16, 15, 14, and thus making an average that would be more accurate to what's more recently going on anyway. Okay, thank you for tuning in to today's video, and have yourself a magnificent day. Bye-bye.